Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, August 5th, 2007. Audrey, my girl, this is going out to you, babe. S&P 500 absolutely destroyed on Friday's action. We were down 2.66% here just in one day on the S&P. Violation of a 200 MA here and violation of prior swing lows, which were at 1439. If you look on the intraday chart, it really just started accelerating late in the day and just didn't stop. They sold it right off into the close. Going back on the dailies, we'd have to go all the way back to like February 27th, the big 227 debacle here to see selling that big. The S&P lost, I think, like 50 and change on that day. This was almost as horrific, losing 39.14. In last week's video, we talked about this trend line support here. Last week, the market closed right about here at this low point here, and I was saying, well, now we got some trend line support. We should see a minor bounce, which we did. However, it was extremely short-lived. If we crank this backwards, 1 day, 2 days, 3 days, 4 days, 5 days, and we see that this is what the chart looked like the last time we got together, right? And we put a Fibonacci on it, starting from the top, right? Adriana, put the Fibonacci on it, will ya? Okay? Look at the bounce. Nothing. We went like 25%. You guys realize that, right? There's absolutely nothing doing here. We didn't even get a full like 38.2 or anything, right? And I'm just going from last week's lows. I'm not putting into account, obviously, these last 5 days because I wanted to figure out where we had bounced over the course of the week. And it was extremely weak. We were expecting at least the 38.2, maybe to this 1500 area. The selling is just so strong as of late. Market couldn't even get anywhere near there. All right, Dow. Same situation. Not as relatively weak as the S&P because, look, obviously, we didn't violate the swing lows here. However, if we look on the longer-term charts, the Dow is still not even near the ascending trend line. I've been talking for a while that I think the Dow is headed back to the new, back to this whole number at 13,000, and that's pretty much it. The next support on the Dow is here at 13,1290. NASDAQ Composite just absolutely destroyed on Friday as well, down 2.5%, right? Monthly still has some room to move to the downside. Weekly, bing bong, a little bit of a break in trend line, right? Probably going to about 25.40 at this point if this gets broken in this area. What to expect going forward? Honestly, I think lower. And the reason I think lower is because if you look on the longer term charts of like key sectors such as broker dealers, a lot of the action on Friday was attributed to some negative comments from Bear Stearns. Stock sold off hard midday here, just got really cranked down. That was a big part of it. That was also fueling the fire for the weakness in the XBD. The broker-dealer index is just getting hammered lately. And if you look on this weekly on the XBD, this is what I call filling up the triangle, right? Here's your triangle, right? And generally this space here is now going to get filled up, especially given the fact that this prior support area here has been violated. So momentum is more than likely going to carry prices somewhat to here at this point since we already violated this area. Okay, now it's obviously not going to continue to move in a straight line down here week after week. There will probably be some bounce. There may be a move back to this trend line here. If there is, what we call the KISS effect, where stocks bounce back to the other side of the trend line, then you'd obviously be wanting to look at quality short setups in Merrill, in Lehman, in GS, anywhere on the backside of that trend line. Okay, that's the brokers. Okay, the banks also. Look at this monthly banking index. Right, got a ways to go before we get to this trend line. I mean, where does this look like it's going to head next? Probably to this support area. So banks are going to get a little bit more deflated. So if the financials are that weak here, right, you can pretty much expect the same from the S&P because they pretty much move together, and the financials obviously make up a huge portion of the S&P. The entire S&P 500, 21.6% of that is weighted in financial stocks. So keep that in mind. So that's why I'm showing you the brokers, I'm showing you the banks. If you look at insurance as well, IUX, right, look at the monthly here. It's probably headed back down to here. So a little bit more weak. Look at the trend line break. A little bit more weakness to come there. On the tech side, look at the semis on the daily. Probably not much more weakness in the near term, but I think we're still going to this 200 MA here. Generally, these 200 period moving averages act as magnets, and it's just going to pull the semis right to it. So at 487 here, I'm expecting at least 5 more points lower on the stocks. Probably, however, more than likely, all the way to 473 because this is probably past a 61.8% retracement, although I haven't put the Fibonacci on it. We could actually see how much of a retracement that is from the bounce. Yeah, huge, right? I mean, it's pretty much going down to here. It's pretty much done, cooked. So semis are going to have a little bit of a more move down. As you can see on the weekly, we've given back this whole advance, and again, probably moving more closer to this support area. Last week, I talked about this overall volume matrix that we do every single week, and I said that we're going to start putting less emphasis here on the overall volume here and more emphasis here on the breadth. I still am updating these numbers here, and here's what it's looking like for August. But I want to keep everybody's focus on the blue numbers. And again, these blue numbers are posted in the ShadowTrader Pro Focus Report, which you can get information on at www.shadowtrader.net. But at the end of the week, if you're watching the video, here's where I post them. These numbers are simply a relationship between the up volume and the down volume on the NYSE. For instance, oops, sorry about that. For instance, this number here, in blue, what it is it's the up volume divided by the total volume, more or less. The up volume over the up volume and the down volume added together. So obviously if this number is under 50, then the breadth is negative. If this number is above 50, then the breadth is positive. But generally you need to see in a market here, like when the market ran, you need to see this number close at least over 75 or 80 even to indicate to you that there was some strong A for accumulation, meaning the markets went up and the volume went up and that the breadth was strong, right? Well, Friday was such a horrifically bearish day, and it appears to me that the breadth indicator here, looking back on it, and I'm going to start marking these down at the close a lot more than I have been, because I've been punching these in at the end of the week, and I've been talking about how much of a great indicator I think this is, and I think it's going to be, because I just started using this recently. And notice how, if you were following the breadth this week, okay, it really kind of showed you that we were headed for this Friday because we had 2 up days this week, right? But look what the breadth did. It closed at parity as the Dow was up 150 on Wednesday, right? And on Thursday, as the market was up another 100 points, it climbed as high as 62. All of these are very weak readings. Very, very weak for a bounce day. For days that were supposed to be overtly bullish when the market was up strong, right? The breadth really didn't do much. This tells you that volume was not really flowing into up stocks as the market was bouncing. On Friday, when the market got absolutely destroyed, the sellers were out in full force. Okay? This breadth number here was 5. Okay? This tells us that the ratio was like close to 20 to 1. Because this 5 is like 1/20th out of 100. This number is basically reads between 0 and 100. So it was 20 times the down volume going into the close on Friday on the NASDAQ, on the NYSE, excuse me, and about 10 times the amount on the NASDAQ. Okay, so basically what this thing is showing you is on the up days, nobody's really stepping up to buy stocks, and on the down days, they're continuing to sell them very hard. So we should continue to see a continuation in trend in the coming weeks in the markets, because generally the markets are going to follow these breadth patterns very, very well. Okay, so going forward, again, expecting a little bit more weakness in the S&P. Break of the 200 MA, right? Weekly trend line is broken. Next heavy support is really down here, and we could easily go there. I'm telling you, it could easily go there. Remember, these straight line areas do not support very much. We have now broken a longer term trend line here in the SPX. Breadth patterns are bearish. I think brokers are going to be the play short up into any bounce. Also, look for inverted weekly bars that are showing signs of topping. Probably be some opportunities there. Bias for now is down. On behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course, as always, all the good people in Chicago, Illinois at Think or Swim, I wish you good trading and good night.